Breaking news in global economics. The United States has just announced a shocking 50% tariff on key Indian exports. Within hours, India's rupee took a sharp dive, and markets across Asia began to tremble. What does this mean for India's economy, US-India relations, and the global market? Let's break it down. On Tuesday, Washington imposed a sweeping 50% tariff on a wide range of Indian goods, including textiles, pharmaceuticals, and automotive components. Officials in the U.S. claim the move is designed to protect American industries and address what they call unfair trade practices by New Delhi. The response was immediate. The Indian rupee fell sharply against the U.S. dollar, hitting record lows. Investors quickly pulled out of Indian equities, and volatility spiked in Asian stock exchanges. So why such a drastic move? Analysts say the Biden administration is under growing pressure to tackle America's widening trade deficit. India has become a top exporter of pharmaceuticals, tech components, and low-cost goods to the U.S., making it a major competitor for American manufacturers. Some experts also argue that this isn't just about trade, it's about geopolitics. With China and Russia in focus, the U.S. is sending a strong signal to all its trade partners: comply with U.S. standards or face the consequences. For India, the impact could be severe. A 50% tariff makes Indian exports far less competitive in the American market. Industries like textiles, which employ millions, are expected to suffer sharp losses. The pharmaceutical sector, one of India's strongest exports, may also face shrinking demand as American buyers look for alternatives. Meanwhile, the rupee's plunge increases inflationary pressure at home. Imported goods, especially fuel and raw materials, become more expensive, squeezing both businesses and consumers. Investors are already worried about capital outflows as foreign funds retreat to safer markets. But this isn't just an India problem. Global markets are shaking. Asian economies tied to India's supply chains are bracing for aftershocks. European companies that rely on Indian manufacturing may also feel the pinch. And let's not forget, if India retaliates with tariffs of its own, it could spark a new trade war, adding even more stress to an already fragile global economy. So what happens now? Indian officials have condemned the move and are expected to challenge the tariffs at the World Trade Organization. Behind the scenes, New Delhi may also look for ways to strengthen trade with other partners, like the European Union, ASEAN nations, and even Russia, to offset the blow. But the big question is, will the US and India find a diplomatic compromise? Or are we witnessing the beginning of a long trade standoff? One thing is clear. This 50% tariff has sent shockwaves through financial markets, shaken investor confidence, and raised serious questions about the future of US-India trade relations. What do you think? Is Washington protecting its industries or pushing the world closer to a trade war? If you found this breakdown helpful, don't forget to hit like, share, and subscribe for more global news analysis. Thanks for watching.